ShadowTrader Video Weekly for Sunday, September 8th, 2013. We had a wild day in the markets on Friday, where there was a really huge reversal on news here, but the markets ended up closing relatively flat anyway, but we did go a little bit higher. I'm still focusing on the daily S&P in regards, or I should say in relation to what the NASDAQ and the NASDAQ composite look like. You can see that we've come right to the downtrend line in Friday's trade at the end of the day in the S&P, and this is really an important line in the sand now. The S&Ps need to cross this line to go higher, while the NASDAQ 100 and NASDAQ comp, you can see how they both look very different, how they actually look like they're sitting right at the top of a range here, and they look more poised, I would say, for a breakout than the S&P does. So that's interesting. Now, overall, I think short-term trade is still dominating this market. On Friday, we had this huge gyration that I just talked about. And if you look at here on the ES, we traded a healthy number of contracts, like 2.5 million contracts, which is pretty healthy in relation to how it's been lately, kind of toward, to the upper side of the range. Yet overall volume in the New York Stock Exchange, and this is a site that I use here, it's this NYSE. If you want to do it yourself, you can just use this URL here. NYSE volume still came in under 3 billion, and that's been a problem for a while now, that this has really kind of become more the norm, where we've just been trading this lower volume under 3 billion shares. So it would appear to me that a lot of the turnover early on, especially, was just futures inventory correcting on Friday. There was some knee-jerk reaction to news, and we plunged lower and we turned back around, but it seems like it was really just more in the futures market. I'm taking into note this action here over the last few days, and the fact that we did power higher over Friday and Thursday, yet the close of all 3 days is relatively unchanged. So keep this in mind for next week as possible sign that the market is struggling here. I think overall, if the NDX can break out definitively over this high, it will pull the S&P with it, and I think that the SPX getting itself over this trend line could bring in some new buyers. But overall, when you look at the S&P, and especially when you look at the Dow, if you look at DJI here, they seem tired to me, right? The Dow is really more like a perfect bear flag here. It really hasn't moved. And this action of the last 3 days being relatively unchanged, even after pushing higher, is something definitely to look for next week. To illustrate this, I want to show you what the market profile looks like. The red circled areas here, those are your closes. These are all the settlement values. So notice how all three are relatively the same. They're very, very close to each other. And if we bring these three profiles together and we merge them, we can see actually where value is over the over the course of the 3 days. If we make like a 3-day period out of Wednesday, Thursday, Friday, we should note that the point of control of those 3 days is at 53.50, and the majority of the volume went off here in the fat part of the distribution between roughly 50 and 55. So I'm going to keep in mind that that 3-day point of control is 53.50. And the way you should be looking at this is you should be looking at it as a large balance area and be thinking that an up move is only going to develop with acceptance above this area, and a down move is going to develop with acceptance below it. So this is kind of the line in the sand, kind of the tipping point. Now in Friday's session, and I'll split these back out, in Friday's session, we did have a decent amount of trade in the upper part of the distribution here, which I think is bullish, because what it did is it made the value area actually much higher. It's what we call an outside day, where the value area of the previous day is inside. Outside days are generally considered bullish, and however, they do require follow-through. So they have to be monitored for continuation like anything. But it was an outside day. Also, there's a good amount of acceptance up here above the prior day's value area, so that is bullish. So everything really hinges next week on trading above this 53 to 55 section and holding. It also hinges upon the NASDAQ, breaking out to those new swing highs there, as you can see in the NDX and in the comp as well. If that can't happen, or if that turns out to be a look above and fail, and you see the NASDAQ and NASDAQ composite move up and then come back into range quickly, I wouldn't be surprised if that brings in some selling in the S&P, because as I was saying I feel that all the movement here is really dominated by momentum players, weak hands, and it still does not appear to me that there is any longer term money participating in this market. Okay? If we do get a downdraft, then I am going to be on the lookout for a bigger picture trade of moving on the short side, and this will happen over a good period of time, but possibly as low as 1560, which is a prior low and ties in with a trend line here in the S&P. And the reason I say that is that if that scenario plays out and we don't get the NDX pulling the market higher up to this level, be aware that the S&P could be forming a very large head and shoulders top. This is a left shoulder, this is a head, and this is a right shoulder. So I'm just thinking ahead of the different scenarios of what could play out and trying to see where the market could be, say, 2 weeks hence, 3 weeks hence, a month and a half, 2 months, etc. So that's one scenario that that may play out. Okay. So that's the situation really in the broad market here. What I'm going to be looking at for next week. Outside of that, I don't have too much going on as far as trade ideas. All of the ideas I gave you last week, none of them set up. If you recall, I gave out ideas in Apple, CME, Google, Foot Locker, which is FL, CBOE, MasterCard, and Amazon. The only one that's set up, and it happened on Friday, was CBOE. CBOE came right to the ascending trend line, pretty much to the penny and bounced. So if you're not in CBOE yet, you can enter a position over Friday's high or even anywhere inside of Friday's range using Friday's low as a stop. Okay. Last but not least, I'm going to leave you with just some monthly charts on some commodities that I've been watching. I talked about this on the Tasty Trade show earlier in the week. It's monthly charts. It's the same corn trade I've been talking about for a while. So I'll start with corn. That's ZC. And I'm going to switch to the monthlies. It's the same longer term trend lines I've been talking about on the corn trade. It's now moved up a little bit. I was calling like 430 to 420. I think it's more like 435 to 425. Now you can see it right there. That's corn. If you're going to go do corn, you might as well do wheat because they're very similar. So in the wheat, that long-term trend line is right around 573 there. And the other one is coffee, which is really, that's KC, /KC. This is a long-term downtrend for coffee coming into support around this area here. And bonds. A lot of people would think I'm crazy to be looking long bonds, but remember, it's a trade, not an investment. So I put an alert here to alert me when bonds are at 126 and 27/30 seconds. That's what I'm looking for there, as far as just to alert me that the trade might be setting up. And I think the bond low end of the channel here supports around 125. So these are all longer term futures trades that I am looking to get into. All right, that's all I have for this week. On behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, I wish you good trading and good night.